All right. Hey, good morning, everybody. My name's Eric Forgy. I'm very happy to be here presenting to you guys. I had the thing I'm excited about this is just focus on community builders, creators, etc. So they asked me to present some stuff. Devon, Luigi, and all the Avalabs guys heard my story and it's like, okay, let's get this guy up and talk about some stuff. So who am I? You can kind of think of me as like the jolly DeFi professor. So I've been a academic. I have a PhD in physics. I was at MIT Lincoln Lab working in ballistic missile defense for a couple of years, working on radar systems, stuff like that. So kind of hardcore science. And so I'm really into the hardcore science, numerical stuff. Let me see. So like like a lot of the physicists and mathematicians going back, some time now, they heeded the call to Wall Street. So about early 2000s, a lot of quants and mathematicians started heading to Wall Street, and that's me. So I'm one of those Wall Street quants who spent some time in TradFi. And then, let's see, started on Wall Street, then my career path went all over the place because I started around the time of the global financial crisis, which was a very fun time to be in working in finance. And so I started in Wall Street, did a bunch of stuff like traditional asset management. I work at Capital Group, 1.3 trillion assets under management, trillion with a T. So we're talking about very big numbers. And so when I look at those, my time at Capital Group kind of desensitized me to big numbers. And so when you think about blockchain, decentralized finance, we still haven't even started yet. So when I look at things like Uniswap doing $1 billion volume a day, it's like, it sounds great, but we used to do like 80 billion a day just at one asset manager. So like we haven't even really started yet. So I'm very excited to be here, very excited to be building DeFi stuff on Avalanche, because I think Avalanche has very aligned with the stuff I believe. I'm not part of Avalabs, but in heart I am. So it's like very, very much aligned with what's going on at Avalanche. Let's see, I don't want to go through all my stuff, but I've been all over TradFi. So traditional asset management, quant hedge funds. Then I did a couple years in insurance. And the thing I got from coming from physics into finance was that traditional finance is horribly, horribly broken. So I was in finance until around 2014 and then started doing startups. So it's like, okay, I see so much pain in TradFi. Systems going back 20, 30 years, written in COBOL, Excel files all over the place. So TradFi is such a horrible mess, such opportunity for innovation happening there. So going back to say 2009, the key word there was fintech. So everybody kind of got upset with the banks during the financial crisis. Fintech, let's develop new banks. Some people, I wish I was in that group, saw crypto as an alternative. I was a little late to that party, but I'm there now. I'm pretty excited. So let's see. So for today, like the title of my talk is quite general and educational. So I kind of want to go back to where things kind of started, because if you're new to crypto now, it's like NFTs are cool, tokens are cool, up only, but there is something very deep happening here, and I kind of want to talk about the deepness and the future of what we're building. We're building a future of finance itself, capital markets, decentralized capital markets. And then we'll talk a little bit about what I see is going to happen. So this is kind of OG stuff. So I was actually here when this happened. So going back to like 2007, everything had been very good for a long time. Let's see, I think I skipped. Okay, here we go. This is the first one. so here's three economists. I think you recognize them all. The first one in the middle is Paul Volcker. He's this kind of Chad guy here in the middle. Then you got these two clowns, Ben Bernanke and Alan Greenspan, underneath him. And why is Paul Volcker the Chad? Like, you might have heard that there's a bit of an inflation problem now. So if you go back to the 80s, there's even a bigger inflation problem. So Paul Volcker came in and tackled that. So he raised rates, tanked the market, tanked everything. Economy collapsed. Until rates were low. So he conquered those high rates. Hats off to him. Like he had some gumption to kind of do what needed to be done. But then, like after Paul Volcker, we have Alan Greenspan. And so, there's a period of time from, say, 86 to 2007. If you talk to economists, they were very confident. They said, guys, we conquered the credit cycle. There's no such, the economy is good. We figured out how to do central banking. We figured out how to do monetary policy. But all they were really doing was pumping markets and bailing out banks from 1986 until 2007. So they call that period the Great Moderation. I don't know, has anybody heard that phrase before? The Great Moderation? Probably not, but like if you go back to 2007, all the economists were talking about the Great Moderation, how awesome we are, patting themselves on the back. But when I looked at that in 2007, I was talking to economists, some of the top economists in the world. It's like, no, I don't think that was a Great Moderation. That was like, history books will not be kind to these clowns, right? History books will show that as the most irresponsible period of monetary policy, basically inflating everything. And so we're kind of seeing that happening now, kind of consequences of that. Let's see, 2007, like why did the Great Moderation end in 2007? And why don't you hear about that anymore? Because the world almost came to an end. Like the financial system almost collapsed. And that started in 2007 with a couple of Bear Stearns hedge funds. They were into mortgage securities. The housing market was completely in an asset bubble. I had a secretary, one of my secretaries, he was telling me like, oh, you should buy more houses. I own 6 houses in Las Vegas. It's like, okay, yeah, are we in a bubble or what? So if my secretary owns 6 houses in Las Vegas, we know there's some problems. So that was 2007. Things started falling apart. 2008, Lehman Brothers failed. So this is like September 2008, Lehman Brothers failed. And I was right there. So like I knew the guys from Lehman. I was at Capital Group. We were the number 1, 2, 3 in terms of trading volume with all the investment banks. So we had perfect access to everybody at all the banks, not just Lehman. And Lehman were this is kind of a uncommon tank. Like if anybody's, who's heard of Lehman Brothers? So you guys have at least heard of Lehman Brothers. And I think the narrative now is like, they were so horrible and they were so stupid, they failed. But actually Lehman Brothers were the best of the best. So going back, why did Lehman Brothers fail instead of like Citigroup? Citigroup was a miserable mess. All these investment banks had very poor risk management. When I moved from Citigroup to Capital, I had been building the CDO risk models. I don't know if CDOs was kind of a word that came out during the last financial crisis, but they didn't have risk models. So if I had stayed, I would have built the risk models. So I was like, how on earth is there $40 trillion of notional exposure to these things and they don't understand the risk? So I was there. Lehman Brothers was the best. They were thrown under the bus basically because they could be thrown under the bus. If they had thrown like Citigroup under the bus, everybody else would have collapsed. But Lehman Brothers is actually the strongest one, so they could get thrown under the bus and still survive. But look at some of the timing here. Well, so going back, like, okay, if you're sitting there, Lehman Brothers collapsed, all the banks are a mess. So what are you going to do about it? Like, this is like 2008, 2009. I was thinking like, oh, all these banks are going to fail, so I should start a community bank. Wouldn't that be cool to have a community bank? Because what do I need? I need a job. I need some place to put my money. I need some place to be able to pay bills. I don't need Goldman Sachs to do that. I don't need Citigroup to do that. But I do need a bank, or at least I thought. And so I was thinking about setting up a community bank. But some people much smarter than me had some other ideas. So if you look at this, January 3rd, 2009, it was just a couple months after Lehman failed, the first block Bitcoin was mined. And like, how many know, like, it's cheating because I put it here, but how many knew this message was embedded in the very first block mined by Bitcoin? Yeah, so there's a couple of people know, I was not in Bitcoin at the time. I wish I was, but this is a protest message, right? Bitcoin was originally a protest against the current financial system and all the bailouts that went into it. And since then, it's been going on continuously. Banks are still producing record profits when all they're doing is being zombies taking money from the Fed. So this is, the first block was a protest, and the whole thing has been a protest from the beginning. And so, now I don't know how many people feel we need to protest the banks. Like, I think we got bankless, those guys are pretty awesome, but like, we're still kind of beholden to this kind of broken financial system. And let's see, before I get to that, let's see. So what I wanted to do was escape. I said, one way to escape is community banks, but a better way to escape is crypto. Decentralized finance, your own self-custody, permissionless censorship resistance, etc. So like, I was kind of late. Like, I'm put this here, and if you have not seen this, please scan it. Scan this QR code and watch this. I don't even mind if you go watch it now and don't finish listening to me, because you gotta see this. How many people have seen this? So just a couple. So like, you all gotta see this. Like, I've been a startup for 8 years now with 3 different startups. Every one of my staff required viewing to see this. So you gotta see this thing. The vision from Vitalik was just beautiful and amazing in this presentation here. So, but what is it? I think we all kind of know. It's Ethereum, EVM chain, smart contracts in a decentralized way. So the downside, and a lot of people ran into this early days, is the Ethereum blockchain, EVM chains in general, like even Avalanche C chain, is quite slow and not very powerful in terms of compute power. So how do you build financial services on something which is essentially like sometimes I describe it as a decentralized pocket calculator. It's like there's enough compute power there, like on your phone has more compute power than what you can do on a C chain or EVM chain. So you cannot, it's very hard. Some people tried and failed to do traditional finance. Just take what you do in TradFi, plop it down onto DeFi, and it just doesn't work. So like traditional exchanges, like limit order books, I think, I'm coming from a finance perspective, so I don't assume everybody knows about finance and how markets work, et cetera. But basically the old school, when I grew up, it's like, whenever you want to buy something, there's always somebody on the other side. So there's no buy without a sale, right? And that's kind of how I grew up. That's how most TradFi people grow up. And that's how limit order books work. If you want to buy a token or a security, somebody else has to be wanting to sell a security. You have to kind of match buy orders and sell orders. And if you're trying to do that on a pocket calculator, it doesn't work very well. So original kind of attempts to do finance on blockchain didn't really work because of the nature of decentralized compute. Until, here's a beautiful thing, November 2018, first post from Hayden Adams. How many people know Hayden Adams, or at least have heard of him and Uniswap, et cetera? So, movies will be made about this guy. Like, I love, you gotta check out, like, he's written like this little short history of Uniswap. It's a beautiful little degen story about a guy who lost his job and ended up working in blockchain and really changed the world, in my opinion. So this is like the first kind of proof of concept that finance can work in a decentralized manner. It can work on a pocket calculator because you're no longer trading against other people. It's more like a peer versus pool model. So what that means is like there's a pool of assets and you're trading against a pool of assets. And with that, you don't need matching orders. You don't need everything. It's simple, it's beautiful. And so that's kind of like what enabled a lot of the decentralized finance to happen, is this move of concept from peer-to-peer transactions to peer versus pool transactions. And like I said, that's a beautiful thing. I think, from here, it's like, that happened in 2018, so that's like just getting started. Like 2018 is 4 years ago. In terms of technology, that's really nothing, So now we have Ethereum, we have Bitcoin, we have Avalanche, we have so many alt L1s coming on board, and we're just getting started. And one of the things, like this is kind of getting to where we are now. So now we got a bunch of protocols, DeFi protocols for borrowing, lending, trading of tokens. We're looking at security tokens in the future. Regulators are coming, so we got to start preparing for doing things in a regulated manner. There's still lots of stuff we can do in kind of the permissionless, censorship-resistant manner, but still, there's going to be there's no reason to have a New York Stock Exchange anymore. That's going away. New York Stock Exchange is going to be on-chain, for sure, in the next 5 to 10 years. And I'm excited to be building that. So I'm helping build the rails for what a future of capital markets will look like. And let's see, I think, a couple, if I step back, a couple things specifically about this group. I'm pretty new to Avalanche community. I kind of decided to build my stuff on Avalanche back in June this year. And then I went to Avalanche House in Brooklyn, July. And, I was kind of honestly, I was kind of at the end of my rope as a startup. How many people are working on a startup? Good, so very cool. So if you're working on a startup, you know that it's not always rainbows, right? It gets hard sometimes, and cash runs out, and it's exciting. I wouldn't change a day. I've been doing it for 8 years now. I wouldn't change anything, but it can be stressful, right? So I was almost at the end of my runway. It's okay, I'm gonna have to find a job or something, God forbid, and then, but I went to Avalanche House, and it's just a community has been amazing. Ava Labs is amazing. I don't think you'll find a better community. Luigi, the head of DeFi, he kind of took me under his wing. Morgan, head of institutional stuff, was where I'm going to. She's been awesome. Devin, marketing guy, but he's more like a friend. This community is pretty awesome, but that's not enough, right? Community is awesome, and I'd love to be a part of a great community, but it's not enough. It has to be tech. It has to be better. It has to be something that we can actually build on and be practical. So kind of what got me here, and what I think where we're all sitting, not just me, is that we're at this point where, we got Russia, Ukraine, we got China. There's so many risks in the world right now, and the financial system is still broken. It's been held afloat by low rates. Low rates basically mean Fed, Burr, printing money, et cetera. But that can't last forever. We're starting to see inflation, so Feds have to raise the rates. So financial system is kind of teetering right now. And one reason we bailed out all the banks and why the Bitcoin first block complained about the bailouts of the banks is, there's no alternative, or at least they thought there wasn't an alternative. I knew there's alternatives. It's we can't let Goldman Sachs fail. We can't let, Citigroup fail because the whole financial system will collapse. Well, that's bullshit, right? If all you need is a place to put your money, a place to earn your salary, way to pay bills, I don't need Goldman Sachs for that. But, that's where we were in 2009, bailouts, complaints, Bitcoin protests, et cetera. But here we are kind of almost at a stage where, if there's a financial collapse tomorrow, I don't think anybody in this room would be surprised. It's there's so much risk out there. If all the banks collapse tomorrow, then who would be surprised? I wouldn't be. I hope it doesn't happen, but we're in this kind of risky situation. And what I'm excited about is we won't fail if that happens. There is an alternative. Blockchain is a foundation that we can build all this stuff. We can, get paid on blockchain. We can get paid, on Avalanche. We can pay our bills on blockchain. We don't need those banks anymore. So it's I think now is a very exciting time for us all here as creators to be building on blockchain because, this is the future rails of finance. Finance is about freedom. It's freedom of transaction, freedom of speech. So that's kind of why I'm here, because I want to be building that. I've been trying to fix things from the inside. I want to build a community bank. I wanted to fix insurance companies. I want to fix banks, but they can't be fixed. These big financial institutions just can't be fixed. We have to start over. So that's kind of what we're doing now, with Avalanche C-Chain, subnets, we're rebuilding this financial infrastructure that will allow Goldman to fail. Like at some point, it's okay if they fail, because the world will go on without them, and that's what I'm excited about. So how am I on time? I still have some time, but that's basically my message. So like I would say, like, I'm here. I'm the jolly professor. I love teaching stuff. I've been around. I've been a physicist. I've been in TradFi. I've been doing DeFi enough now. I'm here to meet people, and if I can help people, like if there's any way I can help any of you, please don't hesitate to reach out. I'm building stuff. I'm actually looking for people, so if anybody's looking for jobs or something like that, feel free to reach out to me. So I'm building the next generation, what I call the next step in the evolution of capital markets. Swaps, futures, options, stuff that is needed for risk management, stuff that's needed for decentralized banking. I think if I step back and look at what protocols out there today, there's so much ambition, there's so much creativity. And honestly, when I look at Avalanche and what's happening in DeFi that's where most innovation is happening, in my opinion. We got Platypus, which is like this very creative thing with trading stable coins with some price slippage function. That you haven't seen that anywhere, right? And then we got Dexalot. So Dexalot is a very cool protocol that's on Avalanche, which is actually doing what I started with, these central limit order books. But you can do those on C-Chain now. You can do that as a subnet, because the technology has improved to the point where stuff that you couldn't do on Ethereum 10 years ago, or 8 years ago, you can start doing that now. I'm still a believer in what Hayden Adams did with what's called automated market makers. So this kind of peer versus pool model. So I'm building kind of what I say is like next step in the evolution of automated market makers. And this is really what I'm building is like, I'm building for the next trillion TVL. I'm not building for like a billion transaction volume. I'm building for a trillion transaction volume. So we're going to rebuild financial services on Avalanche, and that's what I'm doing here. So anyway, I think cool. So yeah, I'd love to hear what you guys are working on. I'll be around, happy to talk to people, happy pay it forward, because like I'm standing here because people help me out, right? So I want to pay it forward and help anybody else that I can. Make introductions, whatever I can, happy to do whatever, brainstorm ideas. I'm, like I said, the jolly professor, I'm the jolly professor. I'm here, happy to help. And then, a bit of mentoring. Like, I'm happy to mentor people if you like to hear my perspective. But yeah, cool. So I think we have some break, and then Gabriel's next. I'm really looking forward to hearing Gabriel talk about his stuff with subnets. He's a big reason I'm here too. I mean, like I said, it's not just about community; it's about tech. And what's happening with subnets, it's not all about solidity. It's not all about EVMs. Rust is coming. That's going to be amazing. Rust, WASM's coming. Like, whatever language you want is coming. I'm building I would like to, if I could clone myself, I would build a VM in Julia. So Julia is a language for numerical computing, and I think that'd just be beautiful, right? So if I can clone if anybody's interested in doing that, like, I'd definitely love to help out with that. Building new custom VMs in different languages, et cetera. So anyway, I'm kind of rambling. But, okay, well, I'll pass it off.